Okay, we'll now take a look at exercise 13.8 on 767. They said the following selected transactions relate to liabilities of Interstate Farm Implements for December of 2016. Interstate's fiscal year ends on December 31st. Okay, they want us to prepare the appropriate journal entries for these transactions. On December 15th, received $7,500 from Bradley Farms toward the purchase of a $98,000 tractor to be delivered on January 6th, 2017. Well, you guys, that's going to increase cash of Interstate Farm Implements. Remember, cash, of course, is an asset. Increases on the debit side. But they haven't delivered the tractor yet. They haven't earned that $7,500 in revenue yet. So we're going to call it, you've seen it called unearned revenues in some books. You could call it unearned sales revenue. Your book goes with deferred sales revenue. So that's what I'm going to use, $7,500 as well. Okay, number 2. It's going to seem like a slow pitch after exercise 13.7, but during December received $25,500 of refundable deposits relating to containers used to transport equipment parts. They're hung up on containers, it seems. Okay, on requirement 2, it's like we did back in the previous exercise, we'd increase cash to record the receipt of these deposits, $25,500. If that's not ours to keep, if they return the container, we give them back the deposit. So that creates a liability for us. Again, we'll call it refundable deposits. $25,500. Okay, and then on number 3, during December, credit sales totaled $800,000. The state sales tax rate is 5%, and the local sales tax rate is 2%. Now they're going to say this is a summary journal entry. What they're really saying there is they would have made an entry for sales each day, but they're just asking us to do one entry as if it were just done once that month. So we're going to debit cash here. But we're going to come back to that one. We're not quite sure how much cash we're going to receive yet. We'll credit sales. Your book might say sales revenue. It's just kind of repetitive, but yes, that's what they use, so I'd like to use that one as well. The amount of the sales were $800,000. Okay. The sales tax payable, we don't have to separate it out by what's going to the, I guess you could say sales tax payable dash state, sales tax payable dash local if you wanted. They didn't do that in your text, so I'm not going to here, but they just combined it into one entry and credited sales tax payable. Or how much? Well, it would be equal to our 800,000 times the combined percentage of 7%. 5% state, 2% local. So that's 56,000. And then it says these were all credit sales. So instead of debiting cash, I'm sorry, that was incorrect. I'm sure some of you caught that. The debit would be to accounts receivable. These sales were not made for cash; they were all credit sales. The credit to sales revenue is correct, the $800,000, and then it's still 7% of $800,000 to get your sales tax payable. So the debit to accounts receivable is for $856,000. The total of these two. And that takes care of it. You have some deferred revenue here, a liability for refundable deposits, and a liability for sales tax. So We're just going through lots of different current liabilities and situations involving those. We're going to look at some contingencies as well. Okay, after working that one with me, you should have no trouble with exercise 13.8 in the Connect Plus site. Sorry for the mistake here. That should have been accounts receivable all along. They were credit sales. I just had cash here, and jumped on cash for number 3. I apologize. If you have any questions, please be in touch, and I hope you all have a great day.